Hi, everybody. I'm Mace, your host of the Mad Mortgage Show, the source for no BS, in-depth mortgage discussion, all the way from origination to post-closing. Exciting to be here today. Our very first guest is Jonathan Corr, President and CEO of Ellie Mae. Thank you for being here.
It's my pleasure. I didn't realize I was the very first guest. That's very exciting.
Oh, you are the first guest. Scott Happ, CEO of OB, you missed out.
Scott, sorry, man.
No,
Scott's a good friend, great guy, but I guess I get to be number one.
You get to be number one, yeah. So actually what's funny is this started as a passion project, and as you know, we're one of your ISVs, but I wanted to keep it no advertising, right? Just all about mortgage. Sometimes I call the LinkedIn world of mortgage the Instagram version, right? Everything's great. We're growing. We don't have any problems, right? and so I was like, let's have real discussion. And I said, you know what? And we want to do a lot of technology. And I said, Giles, wouldn't it be cool if we got Jonathan Corr on here one day? so yeah. Thanks for being here.
Be careful what you ask for.
Yeah. Well, what's so funny is, it's going to be mortgage from technology, origination to post-closing. So jumping right in, let's talk about the coronavirus.
Okay. Yeah. What is the coronavirus?
It's this thing. It's going around here lately.
Yeah, it is. It's interesting. You look back, and obviously as a country with all the social media and information flow that's been happening, I think we all have been aware of it. From a distance, right? Since it started popping itself up in China in early January. And it is a bit surreal now because, a lot of the things you were seeing and, kind of feeling for, people going through a lot of the challenges and the speed at which it was moving and affecting business and supply chain and so forth. In the mortgage industry, we really didn't feel it much, right? We really don't have supply chains over in China, et cetera. Right. But now it's coming closer to home. Now, it's still, barely scratching the surface, but obviously with all this information flow that's going on out there, and, the media doesn't help the situation in terms of feeding it and hearing everything from every single angle, it's created a lot of apprehension and fear.
Right.
And obviously at the personal level, if someone, gets something, it's, it has its risks. My opinion, from a layman is that it's still, is not that significant yet, but we need to figure out how to be prepared.
Right. Well, and that brings us to, the experience that we're all so excited about. You just had to make that tough decision.
Yeah, and that was, it really was a tough decision. We kind of were thinking about things over the last few weeks and kind of watching what was going on.
Watching the storm brew.
And, the team had done an amazing job getting ready. We expected somewhere between 2,500 and 3,000 folks, a lot of partners, customers, folks from the industry. I know you were going to be there. A lot of folks had prepared content. And so, for us, it is such the event we look forward to every year.
Right.
I
see the awesome TVs when I walk by it. And we walked in and I was like, oh, like it's just there looking.
No, and it's like it is. And I use the term Love Fest, and I say it's where we get to show our appreciation and love for our customers and partners, and genuinely they love us right back. And it's a great thing where people haven't seen each other for a long time. They're out networking, they're learning. They're having a little good time on the side. They're giving back through, Ellie Cares, and it's really sad. This would have been the 8th year, right? San Diego, first time we were going to do it down there. Lots of great speakers, but we're going to figure out a way to package up that content and create a virtual experience. We're kind of working through those details, and that'll be coming out soon. But we really
you still want to deliver that.
We still want to deliver it. It's not. I don't think it's the same experience, and that's why we held off to the last moment. But as we talk to customers and we talk to partners, and obviously small pockets of effect, but some things in California and some things on the East Coast, and people getting very nervous about traveling, or maybe the restrictions from their own businesses, and it got to a place where we didn't want people to be in a place where they were just tense about doing something, even though they wanted to, because we heard a lot of people, wanted to do it anyways. we just said, hey, let's reduce the anxiety. Let's make a decision where we just take that kind of risk off the table. And we felt it was the best thing for our customers and partners, but really disappointed that we couldn't meet everybody and be with everybody live.
Right.
Yeah.
Well, looking at the silver lining here, it's been great for rates. And then the OPEC deal over the weekend, we see Treasury where it's at. What is your kind of thoughts on the market for the next few weeks or months?
Well, it's probably a few weeks, few months. It could very well be through the year. I know that good friend Mike over at MBA, the chief economist, he just came out with their view of things. They're expecting that actually refis will double this year over last year. So they're now projecting volume of around 2.6 trillion. And, if you look at his commentary and you look at how they're thinking about it, and this was even before the move this week. This was when they were projecting maybe rates around 3.3 on the 30-year fixed. I know rates are starting to dip down even close to 3, and some people have said, I'm trying to get below that 3 right now.
Right.
But that's probably going to sustain for a while. In that right now, rates are not following treasuries completely.
Right.
They're drifting.
There's a lag.
They're drifting with them, but there's still a big spread out there. It's well beyond the norm. And so, there's only so much capacity in the industry. All our customers and partners can only handle so much. So, there's only so much price adjustment that's happening because otherwise you can't serve the customer. But likely, these rates are not going to go anywhere, significantly up, probably for the rest of the year.
For the rest of the year. I mean, this is exciting.
Yeah.
I mean, I do a per loan model myself, so I'm I'm kind of happy about that part.
Yeah.
So shifting gears over to compliance and URLA, that's another thing that everybody's worried about this year.
Yeah.
Two-part question. What do you think that some lenders are maybe overlooking, and what do you think they might be too focused on?
Well, it's an interesting one. So I know that most of our customers don't even think about it. And when you ask them, what are you thinking about URLA or anything regulatory or pseudo-regulatory, they say, we don't worry about it because Ellie Mae, we know you have us covered. I do think just in general, our customers obviously not worried so much about it, but I think folks in the industry have not really realized the broad repercussions of it. When we looked at it and we looked at how many changes that we ended up having to put in place, and URLA has actually been done dark in the software since last year because we were preparing for it to be effective at the beginning of this year, right? So we're making some final adjustments based on the changes that took place late last year, and those will roll in. But it's there, it's ready to go. One of our product managers had a little picture he'd show on the wall, and he had this little picture where you had this, the old-fashioned stairs that went up to the airplane.
Right.
And you're getting ready to go up to the airplane. So he has a picture of all these people waiting on the stairs, but there's no airplane. It's like when you're ready to go and the plane doesn't show up, right? That's kind of how he felt. But we're well prepared. But there's a lot of pieces. I mean, it touches not only obviously the application. It's not an application change, right? It's a workflow change. It's all dynamic now, and so for the consumer, it's probably pretty straightforward because the consumer doesn't do things that often.
No.
But for folks in our industry, just like when we went through, RESPA and Truth in Lending or TRID or whatever you want to call the thing, there was a lot of changes in terms of business process, and people that are industry that are used to doing things one way, that's going to be the same thing here.
Right.
You're
telling me that mortgage people like to do things the way they've always been done?
No. What, creatures of habit? Yes. And there's a lot of information exchange between all the parties that need that data. So there's a lot of pieces there. Mm-hmm. So there's a lot of actually. I think we worked quite a bit with the MBA and Fannie and Freddie to make sure that the testing period, the so-called not an optional use, but a testing period, was pretty restricted, so that we can do the testing as an industry. But the worst thing you could have happen is you're out in a situation and a business is trying to use both versions and trying to bifurcate the process, and probably even worse for a consumer. So imagine I'm a consumer and I go to one lender and I see one form that's supposed to be the 1003, and I go to another lender who's testing another form and I have another 1003.
Right.
That's not a good experience for the consumer. So I think we're beyond that. I think everybody is gearing up. But I would say that if you're not a Encompass lender, you probably have to make sure that your provider, your tech provider's got all the I's dotted and the T's crossed.
Jonathan Corr is ready. Well, you beat me to my next question, which was, how do you guys work closely with Fannie during a lot of this? I mean, I imagine that, like you just said, it's funny as I've talked to lenders and they say, I'm like, what do you know about the new 1003? I was like, well, you can actually flip the form and Encompass already. And they, really? And have you not seen those emails yet? But, it's kind of interesting to see, I can only imagine lenders having to look to their technology, and like you said, they just say, well, Ellie Mae has me, right? Like they're covering me.
We take that. I mean, that's kind of, for us, we take that responsibility pretty seriously. I mean, we know that our customers, are spending a lot of money with us, investing. We keep adding capabilities, and we're doing that because we've kind of made what I use the term with our employees is that our customers buy into Encompass for what I'll call is the whole product, the promise of an ROI that is the combination of the technology, the expertise, the services, the education, and, that's what they're buying into. And so they're looking for us to make sure we have everything covered. And so compliance has obviously been a big part of that, huge part of it since 2008, 2009 as an industry. This is not, compliance per se. It's the GSEs, but we all look at it like that. And yes, I mean, with Fannie and Freddie, from the early stages of them going out and testing concepts for the new form, working with focus groups, et cetera, a lot of those focus groups actually happened right here at Ellie Mae. So we've been kind of hand in hand working with them. We may not have agreed on everything along the way. We may not have agreed on, things like an optional use period and so forth, and we gave our opinions. But it very much is it's a good partnership, and I really appreciate that they leverage us through that process.
I love to hear that because I mean, if Ellie Mae tells Fannie Mae we're not ready, then that's a bad situation.
Yeah, I mean, the thing is that it's not Ellie Mae not being ready; it's the industry not being ready.
Exactly.
Because again, as I said last year, we had everything was ready last year on inside the technology. But as I said, with anything, right? And this because you obviously do a lot of technology for customers, and you go in and you work through change management, right? And that's probably the most difficult thing, right? So 70% they say of software initiatives, right? Not just in our industry, but in general, don't work out exactly the way you want. Not because of the software. It's because of how you go at it and how you manage your change management process. Right? Do you try to take something and customize it around a bad process? Right? Or do you step back and think about, I have all these great technology tools and flexibility. How do I do things better? Right? And so, with any of these changes, whether it be, the TRID or this new URLA, a big part of it is not the technology, although that's a piece of it, is the process. How are you going to do it? How are you going to think through it? How are you going to test for it? How are you going to make that flip from one day you're using this, the next day you're using this, right? Those are that's all the kind of the part of the dirty job stuff, right?
So what do you think was the hardest part for you implementing these changes and just accommodating? I can only imagine trying to make sure you're using some of the same fields. Some of them are new, integrations. What was the toughest part of that?
Well, that's the thing, which is, it really cuts across quite a bit. In terms of, Ellie Mae, we're not just our origination system. Mm-hmm. We have the origination system, but we also have the pricing engine. We have the doc system. We have the compliance engine, right? So that actually is good because it helps us understand the view from some of our partners that also have those solutions. which is quite good for people on the network. So we have that understanding. But we have to go through and think about the coexistence of these things at the same time, which adds quite a bit of complexity to it. We have to make sure that if people go back and toggle back, right, or they're in a form that all that data works in that format, and then when they go forward, all the data works
in the same format,
in the new format, and so there's a lot of work, a lot of planning that goes into that.
Well, I've got to say, you're making me really happy to hear all this stuff, because I think most of my business, if not all, is built on yours. So I love to hear this.
Oh, I tell you, I mean, last year, I would say, of our $100+ million R&D, I think it was maybe 150 last year. A good 55% of it went to this.
Wow.
Right. So cutting across, all different areas. And it wasn't just last year. Obviously, we did a lot of planning up to that. But last year was the crux of the implementation in the first part of the year.
Awesome. Yeah. That's so good to hear.
Yeah.
So let's talk a little bit about Ellie Mae.
Yeah.
Used to be public.
Yes.
Now they're not. Tell me a little bit about that.
Yeah.
What was that transition like, and what are the pros and cons there?
That's a great question. So it was fun being public. There was definitely a lot of positives to it. There was definitely a number of cons to it, and I'll kind of lay it. So the positives were it was great to go out and tell the story to so many people. Kind of what we're trying to do, automate everything automatable, sailing towards the North Star, what we were trying to do with our partners in the industry. So going off and being able to talk to a lot of different people is fun, right?
Yeah.
Telling that story, it's great. It also,
and you're required to.
Well, you're required to. It's also kind of it's nice. It's also nice to be able to have that current scorecard.
Right.
That's the current stock price, which has its benefits, right?
Right.
But also at the same time, if it's not going the right way, it also becomes this thing that employees are fixated on.
Right.
Right. But it was a great experience for 8 years. But as what goes on with being a public company, right, you have to share things with public shareholders. You have to be very transparent. Mm-hmm. And in 18, like we all faced, summer of 18, the market froze up, right? Prices had appreciated enormously. Rates had gone up almost 100 basis points. Inventory was tight. And as an industry, right, we were looking around going, wow, things have just stopped. And, given where rates are, there's not going to be a lot of refi. Excuse me.
You're good.
And likely, we're not going to see the market really re-engage till spring of 19. Mm-hmm. So as a public company, as the CEO, sharing guidance, I had to share that guidance to the market, right? Mm-hmm. Market didn't like that guidance. And that got a little worse because, the tech market in general in the fall of 18 got hit pretty hard, if you remember. So our stock came down quite a bit. Mm-hmm. And again, when you don't have to, worry about a bunch of public investors or even, folks that may not be public investors, but just want to rattle the cage and, have you do things like activists. If you're not public, you don't have to worry about that. But when you're a public company CEO on a board, those are, you have to, answer to those constituents. And so we were, in a position where we were a little worried that somebody might exploit the opportunity. Someone might come in and push for us to take action that may not have been the best interest or of customers and employees and the market. Somebody might have come in and decided they wanted to buy us at a great deal because they saw the long-term, trajectory ahead and the position that we had and, the ecosystem we created. And if they had done that, it's very possible they would have come in and chopped it up, right? And it's not uncommon for some of these big tech companies to do that. And that would have affected our ability to deliver to our customers. It would have affected our ability to continue on with the culture and the vision that we established. And so we were a little worried about that. And, as that was happening, there was a couple of private equity firms that reached out and said...
and didn't chop it up.
and they said, hey, we've got capital. We love what you guys have built. We love the vision. We love the North Star. We love the culture that you have, the relationship you have with your customers and partners. We can see through this short term, and we're willing to get aggressive and take care of current shareholders, pay them a big premium, but then really partner with you as management. Partner with you, Jonathan, and Joe, and other leaders in the company, and let you keep driving the company towards that North Star of automating everything automatable. And in that scenario, being able to maintain most of the workforce, work with our customers, and accelerate. And
so do you think this has been positive for innovation?
So it's been really positive. So what's happened is by doing that, they took all this weight of things I had to deal with the public market, the quarterly constraints, worrying about something being off slightly in terms of public filings, and those are important, but being so fixated every quarter on getting ready for that and how the market would react to one penny this way or one penny that way. Now we can be just completely focused on the innovation path,
on that North Star.
How do we get there? Well, do we build it? Do we partner with great partners, or do we acquire? And so we've been able to double down there. We've been able to go faster. We did our biggest acquisition in the history of the company last year with Capsalon, which is
you're beating to me my
fabulous.
You're beating me to my questions.
We can talk about it, but you go back to the question. It hasn't been positive. It's been really positive.
That's awesome.
It's been a great partnership with Thoma Bravo. They bring to bear kind of best practices through all the companies they have in their portfolio, but they really let us keep doing what we're doing, maintain the culture, do what we need to do.
That's great.
Yeah.
That's awesome. So what kind of strategy do you use whenever you're looking at companies to acquire and or just making that decision?
Yeah. So typically how we're going to look at it is we're going to look at it through the eyes of our customers, right? So we're going to look at both in terms of what we think we see as the short-term need, based on what we're hearing from them, based on what they're facing. What is it that we can add to our footprint? And again, whether that be both on the software or partners or through the network, whatever, but what do we have to add to help them continue to find value, drive ROI, do more loans, do them faster, do them at lower cost? That's always the lens through which we look.
Right.
And then we step back and say, what's the best way for us to do that? Is it something that we believe we need to build out because it's core to the platform? If I ask my engineers, they can build everything because they're all really smart guys and gals. But if we look at the scenario, can we do it through a partnership? Right? Do we believe that it's not something we have to own? I like that idea a lot, of the partnership. It's not something we have to own, right? But it can be a partnership. We can have kind of this mutual benefit, and that's obviously all the partners that we have across the network and now on the marketplace. That's a big part of our strategy, and it really is beneficial all the way around. Or if we believe it's something that's really important for us to make part of the core platform, is there a company that we can buy? Right. And that takes a little bit more than just saying somebody's doing it. It's kind of saying, okay, can we find somebody where what we believe the team that's there can fit into the culture, right? Can fit into the Ellie Mae way of things, and can become part of the family. Can we do it in a way where we can do it at a price that makes sense for everybody, makes sense for the sellers, makes sense for Ellie Mae and its investors. And again, it's a timing game, because there'll be situations where maybe a good product out there, and we have a great distribution channel, but the culture doesn't fit. And the biggest thing that again, we talk about change management in terms of new software. The thing that fails usually in acquisitions is not that you bought the company and paid the price or paid the wrong price. It's how you integrate it. It's how you bring it together, and it's also the team and the culture. I mean, if I use examples of folks where some people might have come out of, say, a very aggressive environment like an Oracle or something like that. that's a great company, and so forth. But an individual that flourished there might not flourish here, right? And so that's what we want to kind of look at.
Oh, that's awesome. Yeah. So the culture is a big part. That's really
it is.
good.
It's a very big part. I mean, so when we think about our success as Ellie Mae, right? We've kind of looked at a lot of things over time, and we say, why have we been successful? Yeah, we got smart technologists and we got smart salespeople and marketing and strategy people, but in the end, I think it's because we've been very focused, in this industry on one thing: mortgage origination, not staying true to the North Star, to automate everything towards that North Star. That's one kind of pillar of it. The other is, I think, the culture and the values we have here, which are, pretty simple and straightforward. Sometimes question why other companies don't do the same thing, and some do, but it's all been about, making sure that, we take a partnership orientation with our customers, that we're passionate about, building great products, providing great service, being open and transparent with them. In software, right, especially enterprise software, you cannot be perfect. So you have to take an approach that says, I'm going to build a relationship. And, sometimes I'm not going to do things perfectly, but I'm going to be, transparent, and I'm going to listen. I'm going to respond. And so that's kind of been the cornerstone. And that was, very much kind of our founder and my mentors, way of being, Sig Anderman. Mm-hmm. And then, from that, the only way you can achieve that is to have employees and teammates where you create the same environment. Mm-hmm. You support them, and you're open and you're transparent, and you kind of challenge each other, but you do it in a respectful fashion. And then what comes out of that is you care about your customers and partners. You care about your employees. Those people tend to care about people, and they care about their communities. And so giving back is a big part of us. I mean, Ellie Cares and all the things we've done there. And I really, truly believe that those pieces are what's allowed us to be successful.
Awesome. So give us a sneak peek on the next acquisition?
Well, I don't know if I can tell you the next acquisition, but I think that we're incredibly excited about what Capsilon brought to the table. And they had a culture that fit in really well. They brought, AI, to the game. So really the idea of, we've been talking about automating everything automatable. What it brings to the game is it helps us accelerate what we'll call intelligent automation, right? Intelligent workflow automation, and using, recognition and extraction and machine learning to help, drive down that underwriting process, mm-hmm. and help people do more with less. So that was key. We also see opportunity in different areas, especially around e-closing. We think there's some very interesting opportunities, and we think there's some interesting things around the secondary side of things, right? Those are areas that really have lagged, and given the position that we're in now, 40+% of the loans in the U.S. are going across the platform. Mm-hmm. But when we start thinking about our correspondent lenders, the folks that are selling loans to Fannie and Freddie, but a lot of the big correspondent investors like
the big aggregators.
Penny Mac and AmeriHome and Freedom and Wells and Chase. What those guys tell us is that 75% of the volume that comes to them comes from folks on Encompass. And so the types of things we can start to do there that create value on both sides, both for the lender and the investor, start to grow very rapidly. And so again, gets back to, do we have to do all those things ourselves, mm-hmm. or can we find some great partners or potential strategic partners that we could acquire and make part of that process?
That brings me to the next question. What do you think is the biggest hurdle for Ellie Mae in 2020 and 2021?
2020, to me, 2020 is really going to be about making sure we're doing everything we can to be a great partner for our customers, stay ahead of the volume, because it's going to be significant, and make sure everything's there for them to be able to run their business smoothly and respond to borrowers. One thing. The next thing is make sure, URLA goes into place, and as we like to say, it's a non-event. Our customers don't even really know that it's happened. quote unquote. But and then in
It's gonna be a
parallel,
tough one to do.
yeah, and then in parallel, obviously a lot of people know that we've been we're delivering the first version of the next generation platform for correspondent, and we're in the midst of rolling that out for PennyMac, the largest correspondent in the country, which is very exciting. But then that becomes the precursor to everything else rolling out very rapidly around that. So, this year is going to be about let's make sure our customers can be successful. We shift to URLA. We successfully get out PennyMac, and then all the things that are kind of coming out of that in terms of benefits roll in, and our customers can take advantage of them in 2021. I already mentioned the Capsilon acquisition. We think that's a big opportunity today because, with all the volume coming in, how can we help our customers, do more loans with the same set of resources?
Yep.
Yeah.
What do you think the biggest struggle is for some of the other kind of mortgage fintech companies, other partners that you see? What do you think they're going to struggle with? People like myself.
No, I think right now, we may all struggle a little bit in 2020 with getting people's attention, right? Between all the business we're getting from our customers are getting from borrowers,
Right.
And, all the things they need to get ready for relative to URLA, other things that they may want to do, which they had every intention to do, right, kind of goes by the wayside a little bit. We
Right.
always see that in this industry.
Right.
And so I think it's incumbent upon us to understand that and respect that, but also, work with these customers to help them, realize that, we're going to have a benefit this year, but this is not a sprint. This is a marathon,
Mm-hmm.
right? It's about being in a position not just for this year, but as we, go back to a normal purchase market and continue to grow there over the next, few years, that they're in place to, sustain and be there for the long term. And so, I think it's getting people's attention and making sure that when we kind of convey the message, we're very crisp about, how does it help them today as well as tomorrow.
Awesome.
Yeah.
So what is one thing you would change about the mortgage industry?
What is one thing I'd change about the mortgage industry? God, it would be great if as an industry we could go faster. There's a lot of things that hold that back that to some degree are outside our control.
Mm-hmm.
I mean, we as folks in the industry, have to innovate around the constraints that are put out there by, the GSEs and the different regulators, et cetera. So, I think, one of the things I tell a lot of, fintechs that, that are partners and so forth, that, it looks easy from the outside, right? It looks like, okay, this is just this and we can easily change this. And why can't it just be like, trading a stock,
Yeah.
right? And it's because there's just so many things that have to take place because there's all this consumer protection in place. And
Mm-hmm.
and so the key is how do you innovate around that? Like and don't look at it as a constraint, but as a way to innovate and create a better experience. I know that, I've been in this industry, going on, this is my 18th year. And when I first got here, people were talking about the true e-mortgage, right? And e-notes. And, we're still a long way from that being
Right.
a broad reality. But, we are starting to see things in terms of the hybrid and the consumer experience. It's, I guess if it was, it was easy, everybody
Right.
could be in here and doing it. I know it's not. It's one of those, and I have the utmost respect for, anybody in this business from a tech standpoint that has had staying power, not, come in and, had some fanfare and then kind of gone by the wayside, but people that have been at this for a long time. And
Yeah.
there are a lot of the folks out there that are on the ecosystem, and, it's a testament to them kind of being focused, listening to customers, and adapting with all the changes that we continually see. on top of the fact that we are in a cyclical industry. So that doesn't add, that adds a little bit more of a, as I say, when you're sailing towards the North Star, right? The North Star is up there and it doesn't move in the sky. At least that's what I think. But, the winds change, the tides change, and you have to continually adjust. You have to tack, especially if there's a headwind. And you have to, adjust.
Right.
You can go at a 45-degree angle. And I think it's, it's not everybody that can do that.
Have you been sailing with Haskell before?
Yes, I have.
I have too. That's awesome. No, I think it's interesting how mortgage, it seems like it's a stop and go. When people are busy, they're like, I'm too busy to innovate right now. Yeah. And then they get really slow and they're like, hey, we're trying to drum up business. I don't have time to do this. And so, and then like e-closings have been around for a while, but then I think this seems like it's now everybody's.
It's getting there. I mean,
yes.
I think, one of the things that I was talking with the team about, so I remember when we first started doing e-disclosures, right? And now pretty much everything's done electronic disclosure, right? But when we first started doing it, we innovated on a solution. Jonas Moe, who's our head of marketing here now, but he was involved in product. It wasn't about the compliance angle of it. It was about the consumer angle of it, which is, let's get the consumer to sign it this way, and they'll get incremental commitment into the process. And, it took a long time for us to get broad adoption because for the longest time, we couldn't do it around FHA loans, right? If you remember that. And so a lot of people didn't want to bifurcate their process.
Right.
But once we got by that, but that took a long time.
Right.
You've had this incredible surge of things around the point of sale. And whether they've definitely improved the consumer experience. Whether they've drastically lowered costs, I think that's still quite debatable, right? In terms of the interest to application. But folks kind of reacted to someone pushing them there. One of the big players with a big commercial.
Yeah, point of sale 3 years ago in mortgage. People were like, what does that mean?
Yeah. And now I think the same thing's happening. So I think that the hybrid e-closing, it adds some benefit in terms of cost benefit, but it's really about consumer experience. And so the more we can get consumers going down that path, when we really can get to a place where everything can be cleared out in terms of the friction that prevents the
warehouse lines
or the remote online notaries and so forth.
Yeah,
exactly. Then things can kind of move along much quicker.
So do you think end of 2020 would be the year? I think this is going to be the year.
So how would you define the year?
Sorry, for e-closing. I think the hybrids are going to start taking off towards the end of the year.
I don't know, because I would have said it would have gone faster this year. I don't know if it would take off. I think you get some percentage penetration, which could set up for 21 and 22. But I think we get beyond, a level of a couple percentage, right? So maybe we get to 10%. I am hopeful that continues down that path. My concern is that with everybody having so much business they can't keep up with, do they have time to step back and look at, because the other thing that's very true, and we've heard this from some of our partners that are doing, taking our docs and trying to do signings around them and so forth.
Mace Innovations partnership with Notarize.
and one of the things is it's everybody needs to think through the behavioral change that needs to go on. And the behavioral change, not with the consumer, but with the title, the loan officer, all those folks, the closer, because what the natural tendency is to kind of go back to the old way of doing things, right? Because it's not perfect, it's not well explained, et cetera.
Especially when you're super busy. I don't have time for this. I'm going to do it the way I know.
So I'm hopeful that it continues down that path, because I think that it's only good all the way around, right? It's good for everybody in the system. Better, experience, should cut down time, should lower cost. Everybody wins. The question is, will people take the time to, think about it the right way? Because, the worst thing that can happen is you start down the process, you have a bad experience, you have some friction, and then you end up having to stop the thing and restart again.
Right.
Yeah.
Jonathan, thank you so much for being here. I
It's a
want
pleasure.
to end on
enjoyed
two
it.
notes. First one, what's something people do not know about Jonathan Corr?
What is something people don't know about Jonathan Corr? Well, I think everybody knows that, you know, I'm passionate about the game of golf. That's probably a given because of the classic and so forth. You know, I'm a big fan of the theater, especially musical theater.
Wow.
Yes. So I can't sing. I used to do some acting and some improv, but my daughters are huge into musical theater, and you know, I've seen dozens and dozens of shows.
Wow. There we go. There's something new.
There you go.
So we want to allow you at the end of this plug Ellie Mae. You know, this is your opportunity to sell whatever you want. This would have been the opportunity for you to say, everybody go to experience. But 30 seconds, go.
Yeah. So, you know, I want to share with this is that, you know, we've been at this for, you know, well over 20 years, you know, with, you know, that singular focus on automating everything automatable. And, you know, it really is about making our customers and our partners successful. And, you know, again, we don't do everything perfectly all the time, but, you know, I do think that, you know, you got passion that runs through every single employee here to do just that, is to figure out how to make our customers successful and to innovate and to continue to kind of, you know, push the envelope. And, you know, that's Ellie Mae. And, you know, we want to go off and help everybody in the industry, help everybody do it for 100% loans in the industry. Any way we can through a combination of our technology and partnerships. So we're excited about it.
Awesome. Well,
Yeah.
there it is.
All right.
That's a wrap.
Thanks,
Jonathan.
All right, man.